Hi, I am Apurva Sheth and I welcome you to yet another insightful episode of The Right Choices with Oracles of the Lal Street. Over the last 2 years, we have been continuously doing episode after episode where we have been inviting market experts who have been sharing insightful and actionable strategies with all of us. So in case if you haven't subscribed to our channel yet, then please do subscribe so that you don't miss out on any of this. In the last episode, we were with Mr. Thoviti Brahmachari ji. In that episode, we had discussed everything about stage analysis. In the current episode, we will dive deeper into it and look into other aspects of Dow theory and how you should position your trade, how you should manage your risk, and we will also look into many charts as well. So let's begin this episode.
There are a lot of industry dynamics happening fundamentally because new players are coming. MRF has come into the paint industry and the Grasim has come into the paint industry. There are several players are making entry into the stock or into the sector. Earlier, it was only few stocks which were leading the sector. Now there are many leading players with a brand value has come into the sector. Stay cautious in stock. And then this is the declining phase again. So from stage 2 of topping formation, declining form, ultimately declines, right? So what the declining characteristics? The 40 weekly average or the 200 DMA, vast majority of the price action around that. And it declines below that. And 200 DMA is definitive downtrend. That means 200 DMA in a downtrend, 40 weekly average also in a downtrend. Stock price is almost near to the 52-week low. When the stock is at the 52-week low, that means the price must be below the 200 DMA and 50 DMA. That's all. There is no other way of thinking whether to apply or not. If the stock is at the 52-week low, means it is below the 50-day and sometimes it is below the 20 DMA also. Okay. And the stock price pattern, series of lower highs and lower lows. That means staircase downside. And short-term moving average below all the long-term averages. Means 50 DMA will be on the bottom side, then 150 DMA and the top will be 200 DMA. That's a sequence. And the volume spikes on the down days. That is the distribution days. So this is again the same Dixon plot. And now trading below all these are in trending down. Look at this trending down. And the spikes, volume spikes on the decline day. Okay, this volume spike, big spikes on the decline day. These are all big distribution days. Okay, unless it forms a series of lower lows and 52-week lows and oscillates around the 150, 200 DMA, price has to move about this and they have to trend upside. Then only it is an investment character. Not now. And this is the stages. How we understand is this is the stages. This is the stages. In any price action, price uptrends, consolidate, downs, again consolidates, moves higher. This is the only 4 stages. This is the only truth about the price action. This is the first truth. The second truth of the market is throughout all these 4 phases, it can go up in a trend. Even in the downtrend also, it can go up. That is counter trend consolidation. Or it can go down any phase. You can take any phase, or it goes into the sideways. That means it may be from a base, flat base, a rectangle pattern. When the market goes sideways, it can move reliable pattern. That means a perfect symmetrical triangle or perfect ascending triangle. There is a characteristic of every triangle, every pattern, right? Or sometimes it may erratic one. Erratic means it doesn't fit into one particular trend line or one pattern. It moves in a erratic manner, very erratic manner. That means the stock experiences higher volatility. Okay, generally these higher volatility stocks never forms a pattern. There is one rule I follow. If you look at the price, must be rhythm. It must have a rhythm in the trendings. Like it moves higher, comes down, moves higher, comes down. So generally in a Fibonacci, if whoever follows Fibonacci, a price extends 100%, then it retraces 38.2%. Any pattern targets, if the target met by 60 to 70%, better book the partial profits. That always almost that is equal to more than 25 to 40% of your capital. Okay, this is the second truth of the market. And how to approach, and then third truth that makes two types of the price movements. One is the price expands, that means price goes higher, and the second thing is price contracts. Okay, it shrinks, it changes in the very thing. Some I think everyone knows the pullbacks and the mean reversion, right?
Yeah.
20 DA, if you look at the 20 DMA or 20 weekly average, whenever the price moves more than certain percentage from the farther the moving average, it generally attracts, it pulls back to the mean average. That's the reason 20 DMA is called as a magnet of the market. Okay, it always pulls the price towards the average. You take any charts, that's the range where the contractions and expansions of the Bollinger Band happens. Okay, this is the third truth of the market. Price contracts and movements expands, right? In this expansion, momentum will be higher. In this contraction, momentum will be waned and very, very low. Okay, our job is to identify the dominant force in the market, whether it is expansion or a contraction. Trade in the direction of the expansion or a momentum, avoid the contraction, wait for the momentum. Okay, the logic is here, in a trending market, sum of all expansions is always larger than the sum of contractions. Did you get the point? Sum of the total expansions is larger than the sum contractions. Suppose a contraction happened within the range of 5 to 10%. The expansion will be more than 40 to 50%. That means 1:4, 5 risk rewards will be there. I'll show you that. So this is the downtrend. All the contractions, this means it's a counter trend rally, like smaller, the larger one, a smaller one, a larger one, a smaller one, and a larger one, and a smaller one, and the biggest larger one. If you look at in a downtrend, these all the expansions are larger than this thing. If you look at if you sum up this, all these small counter trends is smaller than these greater trending things. Even in the uptrend also, if you look at this number of bars, you look at the Nifty chart, it expands 7 to 9 days always. If a breakout happens, Nifty expands 7 to 9 days is the maximum level, and then comes down to 4 to 5 days and then expands again. That is for the Nifty case. For a stock, each stock, we need to identify these expansions and contractions, and some of all these counter trends are smaller than the trend. We can say counter trends, and when the counter trend comes, the market moves in a sharper impulsive move, then it attacks a counter trend, right? Then the third truth, there is Dow Theory says that primary waves, a long-term trend. That means if you look at this thing, this is a long-term trend, right? The whole thing is a primary trend, primary wave. Within this, there is some intermediate and minor trends are there. Secondary waves or the intermediate trends, and the short-term fluctuations called as sometimes 1 or 2 days moves are be there. Those are the short-term fluctuations within a volatility. In that volatility, most of the people stuck or fail. Yes, the market always move in a waves-like pattern, like 1, 2, 3, 4, and if you look at this, because this was declined, this whole thing is called as the wave 3 and 4. Again, there will be a ABCD pattern. Okay, you take any chart. Okay, some people, particularly me, believe in the chart patterns. Some people believe in the Elliott wave. Some people believe in the patterns like what is called as the other patterns, and some people believe in the Fibonacci. Some of other used in the Fibonacci, the Ichimoku, right? So whatever the indicator used, but used only on the price only, no? If the price, if you can be able to understand the price, there is no need of any other way of analyzing things. The other thing is, how do you approach the market? That's important thing. You know everything, but everyone knows higher highs and higher lows, and the moving average trending higher is that's enough. But how do you approach the trading here? Importance of multiple time frames. At least you must use 3 time frames for if you are a trader or an investor, whatever it is. Use 3 time frames. Higher time frame is to identify the direction of the market. That means whether you are in the stage 2 or not, or stage 3, or stage 4. Stage 2 is in uptrend, stage 4 is in downtrend. Stage 1 is a consolidation, stage 3 is a top information, right? These higher time frames will give you the direction of the market, where you are, which stage you are. Trading floor time frame, this is required on a daily basis, which is decision dynamics. That means a pattern breakout on a daily time frame and the whether it is a risk reward potential or not there. Suppose my trading cycle is like this. So average F&O trader have a capital of one single lot capital of roughly about 2.5 lakh rupees, right? Maximum of 2.5 lakh rupees if you will select that. So that means you must not lose 8% of your cap, that's whole size. That means 20,000 per lot is the maximum risk you can put. If my trading or a pattern breakout gives more than that loss, suppose my stop loss is gives you more than that loss, okay, I don't trade. Though it is a confirmed breakout, I don't trade that because the risk is not favorable. Risk is more than 20,000, risk is more than 8 to 10% of my capital. So I don't invest, I don't trade in that stocks. So that's the reason these decision dynamics are very, very important by calculating the risk and reward ratios. At the lower time frames, precision entries and precision exits. I generally follow 1 hour time frame. Where you enter, okay, Baba, breakout happened yesterday closing basis, but whether today's price is exactly above your breakout level, if it is exactly above the lower time frame on hourly basis, hourly closing is prior hourly closing above. That means yesterday's high, last hour's high is, if you take a benchmark, today price is above that or not. That's an important thing. So then these 3 times everyone must follow. If you are a trader, these 3 times. If you are an investor, monthly, weekly, and daily. If you are a trader, weekly, daily, and hourly. For a positional trader. For an intraday trader, hourly, 25 minutes and 5 minutes. That's enough. That's 3 time frame you must always follow. And every time frame, these stages will come. Every time frame, these averages will be same manner. Apply 3 averages, then you will be finding. I'll show you the best setup to identify a trend also to you. So the fourth is trend characteristics. This everyone knows. If the price is a series of higher highs and higher lows and swings and the candles is uptrend. If the price is making lower lows and lower highs, lower swings and the lower candles is a downtrend. No clear higher highs. It oscillates in a range. That means a contraction point. Then trendless in a sideways, no trend at all. Avoid that market. Apply that. This is only 4th truth, right? So this is the character of the market structure. This is a weekly and this is the daily and this is the hourly. In a weekly of the Nifty chart, it is actually a consolidating and a topping formation kind of thing. On a daily, there are a lot of trends, swings are there, right? But if you go to the little lower time from hourly, it gives a different picture. All of them are the same chart or a different time frames. One time frame may be a downtrend, the other time frame may be just moving higher, the other time frame may be consolidating. So try to make it your decision directional and the decision dynamics. You understand the decision dynamics. And the trading reality is, trading is about knowing what to trade, which stock selection criteria, whether my setup is suitable for me. If I enter at a certain price, the stop loss is according to my risk appetite. Okay, that means that is 8% or a 20,000 rupees per lot is happening or not. How much I can risk, whether 1 lot or 2 lots or 3 lots or multiple lots, according to my capital, at the same time risk also. When to trade? Okay, yesterday it was EOD breakout happened, but whether it is trading above that breakout level or not, that's an important factor. Whether the new buying interest came in the first hour itself or not. These are the two things you must consider about before entry. And when to exit the trade, that means your stop loss. So your strategy must give your entry, your stop loss, and your target. If your setup is giving these three things, there is nothing to worry. There is nothing to bother about anything, any other things also. Even if these setups gives you 1:3, 1:5 risk reward ratios regularly. Even if you lose more than 50% of the time, also okay. You will win. If one good trade is enough for you to make money. So it gives you more than 20 to 30% in just a 1 week time. Like yesterday's GETD or whatever it is, even Infosys on the downside, whatever it is. Trading strategy, all these things should tell you your trading strategy, your setup. By looking at the setup, you must understand what is going to happen tomorrow. The trader's job is to execute the strategy with a discipline. That means following entry exit rules and keeping emotions out of the process. Emotions, when you are trading short term, that means 1 day to 3 months period, your emotions will play a lot. If you are balanced on your emotions, then you will be winning the market. And confirm trading time frame and higher time frame. These are the what we discussed little earlier style. The reality is confirm the time frame trend direction with a higher time frame direction trend. Watch for the lower time frame trend turning into the trading time frame, higher time frame direction. Confirm the continuation of the trend. That means all the major, intermediate, minor trends are in the similar direction. Then your success ratio will be ever. Evaluate the risk and reward ratio, a bare minimum 1:2. That means your risk is 1, your gain must be 2. Ideally is 3:1. That means your profit, your reward is 3, risk is 1. We will get, as my experience is that I will get at least 1:2, 1:3 risk reward is almost every day 3 or 4 stocks. And above 1:5, we will get weekly, I think 3, again 5 stocks we will get. One daily 1 stock we will get. You can get 1:10 risk reward stocks monthly, 3 or 4. That's all. So identify these stocks and go ahead with the picking up them. If you are a long hold investor, then you can make money. If you are looking at the short positions, you can go for a derivative trading. Based on these things, you can apply many strategies. If the base is forming, you can apply option neutral strategies. If the market is volatile, then you can apply volatile strategies. You can, if you are trending, your capital is low base, then apply spreads. There is enough options you have. You have enough strategy you can do if you understand this trend dynamics. This is the trading reality. Manage the position with the trailing group. Suppose if you have a multiple time frames, multiple positions, like above more than 2, then exits partial, so that you can taking out the profits slowly. There is one saying that cut off your losses at once. If the stop loss triggers, at once all the positions must be cut. No 1 or 2. If you are booking profits, exit 1 by 1. If you have a multiple positions, that's the way we can. That is an exit strategy. That is the way. Even the war. If you look at the war, any exit will be sudden off. Any stop loss triggers, they'll exit from the field immediately. But when they are winning position, they exit partial, leg by leg, right? And repeat the process every trade. In every trade, you must repeat the process. Multi-bagger, I think this we have already discussed it. The stage 1 is the multi-bagger process. Stage 1 to stage 2 process is the multi-bagger. All the multi-bagger will have the same characteristics. It declines 60% and above from the top and consolidate for more than 1 year. Sometimes quality stocks and the market industry leaders will consolidate maybe 3 to 6 months period. The 6 months period is also good. And then it bounces above the 200 EMA, turns up and goes again to the stage 2 transition. All these three long-term averages must be in uptrend. That is where we can identify the multi-baggers. Once any bear market have the same quality. Suppose the indices will decline 13%. Most of the falls are 13% to 15%, and the downtrends. Suppose if a bear market will be 25% thing, and sometimes like 2008 and 2020 markets are like 40%, and 2008 is 60%. If any stocks declines 80%, means blindly follow that stock for the base formation and go ahead with that. Recently, we picked up one stock, which I will show you that GMR Infra. Okay. This is once it is a star, right? Look at this.
It was a star in 2008.
Yes, it was star in 2008, right? So how much it declined? Do you know? From here to here. Suppose this is the base, right? So it declined 92%. And look at this base formation. How many years this base? From 2011 onwards, suppose if you take this 2013 onwards, till recently, that is 2021 September 3rd, it was consolidated, formed a saucer formation, right? And once all this, the averages are the same manner, 10-week average, 30-week average, and 40-week average. All are then turns above that. This is where we identify, okay? This is where once this 30-week average above the 240-week average, and they both are an uptrend, and the price is also above this thing, and this small base, very small base, what we can say is, this is a small base within this small base. This breakout is a small quantity accumulation, and this breakout is another accumulation, and this is another accumulation. If it moves above this level, another accumulation will happen. Once this is stage 2, base 1. We are beginning of the trend. We are 25% of our target. So once this breakout happens, again it moves about this level, and another forms another base, and moves higher, another forms another base. So it reaches again this level over a period of time. How much time it takes? From here, 2013 to 2023. This is 2021. That means 8 years, right? In next 6 years, you will 4 to 6 years. That means 50% of the time to 60% of the time, the targets will reach. How much target? We can expect at least 61%. 61%. This is our medium-term target. That means 1 year to 1.5 year target is that. So after that, it reaches this 100% of the time. So that's where we can identify the trends, and we can do that. If you look at the infra index, also in the same case. If you look at the infra index, also in the similar manner. So it declined from here to here, base formed base and rallied, and again the base. So sector is in the same condition. The stock one of the leading stock in the sector is also the same stock. Simple logic. So go ahead with this thing. Go ahead with identify the multi-baggers. There is no doubt about that, right? So our aim is to identify the trend, whether it is downtrend or a uptrend, right? So for this, I have made in a setup which are based on the moving averages. Only one moving average of these different things. This is exponential moving average of 34 periods. I took a high. One average is 34 exponential average of high. The second one is 34 exponential moving average of close. And the third is 34 exponential of low. That means this average is same period, but high, low, and close averages. Okay. So the reason I'll tell you, and I am also included the MACD here. So MACD setup is also, I don't have any other lines. Okay. I've removed histogram. I removed signal line. Okay. I placed only MACD line. That's all, and the zero line. Now our aim to identify the trend here. What is the trend here? It is in sideways, right? There is no trend within the averages in the ribbon, and the MACD is flattened. There is no momentum or there is no trend here. And within the downtrend, this trade you avoid. Okay. And if you go a little ahead, so yeah, this is Aarti Industries. Look at this. These moving average turned higher, price is above that, MACD is above zero line. Generally, these MACD and this moving average ribbon will coincide. If the price is closes above this average moving average ribbon, the MACD line will be above zero line. Okay. If the price declines below the average moving average ribbon, the MACD line is also declines below the zero line. As long as this MACD line is below zero line, there will be no long position. Simple rule. And as long as this price is below this ribbon, there is no trade at all. Look at this here also. This price is above, but the MACD line came at here. So your entry is here, not here. So if you enter it here, look at this rally, you can catch up this rally. You can take any, you can just click it and you will find the several opportunities here. This here is the entry, AB Capital. ABFL is another a downtrend, consolidating, no entry for no long. And even ACC also no long. Adani Enterprises no long. Adani Ports just gone up. MACD line is also, it may be in an entry. Even the price swing also, price higher is also crossed. This may be an entry for long. And this is a very great trade for an edit trade here. Look at this level. Here is entry. Here is entry. This all move you can catch. You can do anything. Suppose if you look at this Atul.
So you use this setup for short-term trading?
Yeah, I use this for the 2 time frames. 1 second, I'll show you that also to you. For a daily regular setup, I'll have 2 time frames. One is hourly. Hourly, the same time frame will be happen. Nestle India. And hourly is precision. Just now we spoke about the precision entry, right? For a short-term trading. This is my lower time frame. So this is where we got entry. The same level is here.
So even on intraday charts, you apply the same 34 moving average, 34 EMA. So there are 4 lines on the hourly chart. So what is the 4th line?
This is nothing but in a smaller time frame, very smaller. Suppose I go for this is a positional setup. Suppose if I wanted to, suppose I got here a massive return, right? Within just 1 day, I can exit if this declines below this short-term average. This is nothing but 8 EMA. This is 8 EMA.
Okay, got it.
Okay, 13 EMA. So because the swing is very high, look at this. All intraday positions were carried again here. Again, I re-entered the day before and carried the position up to here. Till now, I am holding this one. Even if you are an intraday trader, you can put it the same strategy and hourly, 25 minutes and 5 minutes time frame. Suppose if you look at this same in the 5-minute time frame, the same thing happens. Suppose we can place one of the index here. Look at this. Here the entry came here, right? Around 11:50 today. 28th February, 11:50 today, right? So carried the position till there is no stop loss trigger because it doesn't close here. Look at this. End of the day, you can exit it somewhere here also. You got enough points, right? Here, if you enter it here, this open, that is 42,993 means 43,000. 230 points in the short-term manner.
Okay.
This is where we can get it done.
Okay.
No. Only thing is you need to identify the trend. Here, the average is also an uptrend, right? There's not a downtrend. In the same case, even if you want to a short trade also, here the short trade is here, right? A decline, the MACD line is also declined below. Here, if you enter at this open 739, this is your stop loss, which is 556. So almost to 200 points. That's enough in intraday basis. So you can trade on any time frame if you know. That's the reason I said every stage will come all the time frame. So only thing is you identify the stages and the trends, price trends and trades.
So the rules are applicable on any time frame of your choice.
Yes.
Okay. So it was great talking to you, sir. Thanks a lot for sharing your insights and knowledge with our viewers. I genuinely thank you for sharing all the insights and the wisdom that you have collected over the last 25 years. So there were lots of small nuggets that only an experienced person can share. I have been using charts for 10 to 12 years, but I have never heard anyone say the trend, there are like 5 or 6 points where the trend line will be touched, and there will rarely be a case where 7th or 8th time a trend line will be touched. So this is something that you get from experience only. So this is just one instance. You have shared many instances, and I'm sure that all our viewers will also note them down and use them in their trading. So thanks a lot. Now, before we end our show, we have a short rapid fire round. This is just to end on a different note. So normally we are always talking about markets and don't talk about anything else. So this is just to end on a different note. So this will be a very short rapid fire round. My first question is, what is your most favorite book?
William O'Neill, How to Make Money from the Stocks.
Okay. And what are you watching these days?
Sorry, I'm not watching any movies.
Okay. So what is the most memorable day of your life?
Regarding markets, investment.
Anything. It is apart from markets.
I'm retired now, actually. I can say recent one. At this age, I've got another certification and another award for me. Last week, in month of January, I've got certification in NISM. All these days, I never tried for any certifications or degrees or kind of thing. Though I have a triple postgraduate and the postgraduate degree, diploma, and I never tried for any other degree, though I'm market participant for the long period. Recently, I have appeared for an RA and RIE both. And as a firm, we have crossed 330 crore AUM here, and in the same month, January. So that's a memorable month for me, not one day. And yesterday, I got a message that I've gotten an award for my journalistic career, which is the best business journalist in the AP Telangana. So I'm going to be awarded on 3rd of this month, where our IT and Industries Minister, Mr. K.T. Ramarao, is going to present the award for me.
Wow. So congratulations for that too.
These are the two things happened in the last 3 months. Earlier, there are a lot of many memorable days, not one or two. When I made, I'm the first journalist to enter the trading ring. When we used to trade, I'm the first financial journalist entered into the trading ring. That is one memorable day which I will never forget.
So you have entered in the BSE ring?
In HSE, that means Hyderabad Stock Exchange.
Okay.
That time I came to BSE once, that time when there is a physical trading is happening, but I didn't go to the ring. But here I went to that. But the same experience, no? It's also.
Yeah. So, and my last question is one life lesson that you would like to share with all of us.
Never risk more. Particularly when you are coming to the stock market, your age also defines your risk appetites. Now I am comfortable doing anything I want. If I don't want, I am busy with that. My moods are not there. I don't come into the market. Simply. If I want, I trade. I don't want, I don't. Simple. Even though setups are there, if I'm not spending time before the screen, I don't do any intraday trading. I identify the long-term trends and other thing. I always carry my mobile, tab, laptop along with me to wherever I go. Those things happens, but risk is the only thing you can control. Rewards you cannot control unless until you realize that is the only thing in your hand. So always avoid risk, control your risk, and avoid and take out profit as soon as you feel you are happy. That's all.
So those were great words of wisdom, and I thank you once again from the bottom of my heart for sharing all your wisdom and insights with us. Thank you.
Thank you very much.
So that's all in this episode with Mr. Thoviti Brahmachari ji. In both the conversations that we have had with him, we have seen several things and we have got several nuggets of wisdom from him. So in the previous episode, we had seen stage analysis and how you should practically go about checking charts and using stage analysis for your investments and trading. In this episode, we have seen other things like using trend lines. We have seen various truths of market. We have seen Dow Theory, and we have also seen short-term trading setups which can help you identify trades and entries and exits. So I'm sure that both these episodes would have generated a lot of curiosity and would have also given you a lot of knowledge and wisdom. So to continue to watch such episodes, please do subscribe to our channel, and see you again next week. Thank you.